Hello, good morning, good afternoon. Hey Jimmy, how you doing? Should be streaming okay. I got 50 pips on gold while waiting for me. Yes, I kind of know. I was looking at the charts as well. That's why I started a little bit, just a little bit later. Hey Linley, how you doing? Hey Angel Case. Hey Lingopedia. I've just put in a link there for the next webinar that I'll be running with Tickmill on the 24th, on the evening of the 24th. The link is there. If you haven't already, do make sure you sign up for it. I'll show you the screen shortly. Thanks for that, Angel Case. Okay, everything seems to be good. Let's get going. All right, so today is Monday the 22nd of April. If you are new to the session, do drop a message, say hi, let me know where you're joining us from. And for all the regulars, a big welcome back. Monday is the day we look at the charts on the H4 time frame. As we look at H4, we look at longer term trades, a bit of swing trades, well, kind of swing trades for the on the H4 time frame. And then through the week, we're looking at H1 for intraday kind of setups. If you have any questions at any point in time, please feel free to put it into the chat and let me know. And you can help me out massively by remembering to click on that thumbs up, the like and subscribe button, and also to drop a message in to say hi. Right? If you have any questions, you can put it in as well. Any particular pairs you'd like me to look at, put it into the chat as well. And if it's all good, we can get going. All good? Let me know. Yeah. Hey YJ, how are you doing? Good morning. Okay, great. So, oops, what's not happening here? All right, a quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to create a financial product. So please remember that your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Thanks for that, Jimmy. So please remember, due diligence, disclaimer applies, learn before you earn, and not that. Okay. Let me see. I'm kind of forgetting something. I feel like I'm forgetting something, but I can't figure out what is it. Okay. Before we get going, just want to share with you this. The link again is there, webinar on the 24th of April at 8 p.m. GMT plus 8. I will be doing a session again with Tickmill about a guide to scalping, intraday, and swing trading, basically giving you or guiding you through the conditions on when you should be picking the right moment, considering when you should be scalping, when you should do intraday trades, or when you should be looking at swing trades, the different risk management essentials for each approach. Okay, we cover both scenarios here. I try to do scalping as much as I can together with you guys, but this is where you can get the bit of educational view on that instead of all about the application. All right, so if you haven't already, do make sure you click on the link there again and sign up for non-clients people. Well, those of you who are not clients of Tickmill, non-client, first name, last name, email, sign up. existing clients, email address, and trading account, and you can sign up, register for the session. All right. So make sure you do that if you want to join me on the webinar. It's not going to be live stream, so you do have to register to join the Zoom call. Okay. Hey, a Pips Apprentice, how you doing? Good morning. Hey, Jumarinas, good morning. Hope you're doing well. Okay, so with all that, then looking at the news, it's going to be a bit of a snooze apart from gold. It's going to be a bit of a snooze for the next couple, or for today in particular. Not a lot of news, right? Not a lot of news to be had. But on to Tuesday, tomorrow, 23rd, we do have PMI numbers to be released for the Eurozone, PMI numbers to be released for the UK, and PMI numbers to be released for the US, right? And those of you who attended the webinar last week on TickMill, where I told you about my pyramid in terms of what's most important, what's the theme of the markets. We know that yes, the PMI is typically quite important, but in the current theme of the markets or in theme of the news, I don't rank it that highly right now. Okay, about I always say a couple of years ago, but it's more than that. A handful of years ago, the PMI numbers would have brought changes in the PMI numbers would have brought quite significant change in prices. But right now, we're seeing it as more of a subdued event. But hey, we'll still be talking about this tomorrow during our session. The big events come into on Wednesday, where we have the Aussie with their CPI numbers to be released. CPI year to year for the Aussie on Wednesday, expected to stay at a 3.4%. Expected to stay at 3.4%. Not a big, well, no big change expected here. Possibly going to, it's still a little bit higher than the RBA's expectation or target level of 2 to 3%. So that's possibly going to lead to maybe a little bit of a hold up on the Aussie dollar before a continuation of the downside. Okay, I'll show it to you on the chart shortly. And then through to Thursday, we have bank holiday. It is Anzac Day for the Aussies on Thursday. So for everyone in Australia who is watching, holiday on Thursday, you might have booked your leave for Friday to have an extra long weekend. It is the Anzac Day on Thursday. We do also have the US GDP to be released on advanced GDP to be released on Thursday. It was a, oops, why is it not coming up? It was a 3.3, revised up to 3.4, expected to come in at 2.5. If it does come in at a possible 2.5 or thereabouts, it's not, I don't think it's going to do too much. A bit of strength to the dollar, but for Jimmy, he's going to have a long weekend. I know that. Hey, when I was in Australia, that would be the kind of long weekend I'll be heading towards. Don't forget that on Friday morning between 9:30 a.m. to about 12 o'clock, we have the BOJ with their policy rate decision, most likely going to stay at a 0.1%, but we are going to be paying some attention to the monetary policy statement, and we don't watch the press. I don't think the press conference is streamed, but we're going to pay attention to any headlines that comes out from the press conference for any possible discussions about intervention or about adjustment to the current rates. And then ending off the week, we do have the US with their core PCE price index again, this time at 0.3%, likely to stay at that rate. Okay, so that's what we have planned, or well, not what we have planned, but what the market has planned for us for the week. It might be quiet today. I got away with a couple of scalps on the Aussie to the downside. You might get with a couple of scalps, but it might not be too many trades. I think it will come back into, liquidity will come back into play from Wednesday onward through to GDP, BOJ, and the core PCE on Friday. So if you're having a super long weekend, enjoy it, but there will be news, and I think most likely there will be volatility to come. And hey Lydia, how are you doing? Hey Diana, good morning. Now, with all that said, dollar index on the H4 time frame. Dollar index on the H4 time frame. This is what we spoke about last week. Right, we said there was consolidating along that 106 level. Look for a breakout to 106.70. Maintain its bullish price if price is above 105.30. 105.30 is on here, so it's maintain its bullish intent. Take those lines away. You can see that we, apart from the GDP and the core PCE price index, which might bring about some upside to the dollar, all right, take that away for now. That's why it needs to stay above. I'll maintain that. I want to draw this and show you guys. There is a bit of a, how do we do this? Okay, there we go. All right, so it's pushed up. There we go. So we had that push up, and then it's sitting in consolidation through the week between 105.80 and 106.40, trading within that range. What I'm looking for at this point is a possible breakout to the upside, right? So zoom out a bit just to show you what's happening. We had that big push up, came back down, and then it broke out of this range to the upside. So what I'm looking for here is something like that, where it pushes up to that resistance level. Okay, so what I see is it needs to break above 106.50 to get to that 107.15 level. So today, the 22nd of April, it is still consolidating along that 106 level. We're looking for a breakout above 106.50 to get to 107.15 resistance level. There we go. Okay, consolidating, looking for it to break out above 106.50 to get towards the 107.15 level. I don't think we need that. We get to that point, and that's 106.50. So I'm looking at this level here, and I'm looking at that high there. So I'm looking for it to break above this point to get to 107.15. All right. There we go. Now, with that in mind, looking at the Kiwi, right? So Kiwi, this was what we looked at last week. We said it'll come down slightly, push back up, and then all the way back down. It moved in a similar fashion, but to a greater extent, or to a greater volatility, right? It did come down, it bounced back up, and then it came back down again to a range of about 60 pips to the downside, right? So you'd have a 40 pip stop loss, a 60 pip take profit. That would have been a reasonable move to the downside on the Kiwi dollar. Take that away. Right, and we see that this 58.70 level held. Now it's pushing, looks like it's pushing slightly lower on the H4 time frame, anticipating a push to the upside. Naturally, you would say, can I sell it down from here? You could go in a little bit earlier, I do see that push, but what I'm looking for is a break of this level. Maybe this point, or break of this area. There we go. Right, I want it to go past that point for sure, 5880, and then close below 5870. That's where I'll be looking to sell it down from. So 5865, stop loss. It could go even 25 pip. Take profit would be a good 60 pips to the downside, down to the support level that was tested on the 25th and 1st of November, 25th of October and 1st of November last year. So we're looking for a continuation to the downside, breaking below the previous low from last week to the downside. What could happen here is a bit like that. I'm looking for this to push down, test, and then come down again. All right. So Kiwi dollar 5865, 25 pip stop loss, 60 pip take profit to the downside. Can't get 25. Okay. So 0.5865, stop loss 25, take profit 60 to the downside on the Kiwi. Then onto the Aussie, moved in a very similar fashion. You can see that we're looking for it to break. Right, we were here. Where were we? We were right there. We're right there. That dotted line there on the Aussie last week when we spoke about it. We're looking for it to break down from this area, breaking the support level to the next support at 6350. Did not get all the way there. It came as close as 636, almost 6360. Good 70 pip, almost 80 pip move to the downside. What you'd also see is that it moved in a similar fashion, down, bounced back up, tested, and rejected that support turned resistance to push down. Right now, again, tested and rejected that resistance level, looking like it's pushing back down. This was a trade that I was doing on the H1 time frame. I was trading this down. I'll show you. Let me see how I can do this easily. This is what we spoke about on Friday last week. Right? On Friday last week, we were doing that. We were looking for that. Either for it to sell down, did not trigger, or to bounce up, test, and reject and sell down. And that's been moving to the downside. So I've been selling that down. But because there hasn't been much move, so I just been scalping it down. Right now on the Aussie, on H4 time frame, what I'm looking for is more continuation to the downside. But what you notice here is that if you were to sell immediately right now, your stop loss would be about at the lowest 30 pips. Your take profit would be about 65 or 70 to the downside, right? And it's quite, it could come back up, hit a stop and turn back down again. So that's something to watch out for. What I would prefer, well, not exactly prefer, but what I would instead be looking out for is remembering that on Wednesday at 9:30 a.m. we do have the CPI number to be released for the Aussie, right? If it stays at 3.4, you see it's been quite consistently pushing lower. If it possibly increases slightly, we might see this push back up. So I might not rush into a trade right now. I'll possibly look for this to do that, turn back up, and then back down again. right? On Wednesday, when the news gets released, then I'll be looking at that point again. So I'll be looking at about 6440, stop loss 30, take profit, could be down here to 70, could be down here to 90 pips. Looking at the similar thing that we saw or expecting from last week. All right, so H1 time frame, yes, you could be selling it down. We do have the setup for that. H4, maybe later into the week or in the mid of the week, we look for that to bounce, test, and reject to sell down. So 6440, 30 to 90 to the downside for the Aussie dollar. There we go, same thing. 6440. Probably had a typo there. 6440, stop loss 30, take profit 90 to the downside. Right, you could sell it down on H1, but I'll be looking on H4 for it to possibly bounce back up and then sell down again. All good so far? Remember, help me out. Do remember to click that like and subscribe, and then we'll get to the US yen. Right, US yen. When you look at it on the H1 time frame, it looks like it's been bouncing around. It looks like it's been doing all kinds of things. But when you look at it on the H4, we were thinking that it's going to sit there. Well, this was on the 15th. We thought it's going to slowly push up towards the 154.20 to 75 pip to the upside. Right, it pushed up as high as 60 pips, almost 60 pips, 56 pips to the upside before pushing back down and ranging again. So take all that away. We do know that we have our resistance at 155, right? But what you're also seeing is that as much as 155 is a level, 154, almost 154.80 has been where the US yen has reversed from over since last week to now. Okay, you can look at that as a good resistance area. And then checking the trend line still makes sense. Check the fib levels. 23, let's do at this point. Take those away. So we're looking at this level here at 153.85. Okay. I see this move, 152 is there. I'll keep that. I don't need that unless I take this whole move up, and I'm considering, let me see, what level should we look at? 50% is right there, that point's there. Okay. So we have those levels there. Hey Stefan, good morning, how are you doing? Okay, so we have these levels, take that away. Hey Jamil, good morning. That's my support. Support, it's fine. That makes sense. I have the round number there, but the 23.6 is close to that round number. And then the 23.6 for the shorter term is right there. Okay, so what I'm looking for. What am I looking for here is a possible push. I'm not going to be, looking at a bounce or a push to the upside on the US yen, right? I'll be looking for this to sell down. About, let me see, 154.28 down, no, okay. What I'll do is, what I'm thinking is that within this range, if the US yen stays within this range, I'll be looking to do this on an intraday kind of setup. H1 kind of trades, H1 kind of setup, not looking at it on the H4. What I'll be looking for on the H4 is if it breaks that support and that trend line. Right? If something happens on Friday or anywhere from now till Friday, if it breaks that support and that trend line, then that's where I'll be looking to sell down 153.60, stop loss 35 pips, take profit. You have this area here 70 to the downside, and then if it's really an intervention, we do have a bigger move of 160 to the downside. Okay, why that big expectation for, you know, if an intervention comes around? Where was it the last time? There we go. Right, one move, one intervention move, possible intervention move, could result in a good 5. Look at that. That's just a one candle from top to bottom. It's about a 500 pip move, 151.53 down to 146. Right, big move to the downside, and then again at this 152 level, this was a bit more of a consistent move lower. We saw that through the periods from the 1st of November through to the 2nd, moved down 130. This one over 3 candles moved down a good 150 pip to the downside. Right, rejection and then a push lower. So because of that, then looking at this, 160 could be a possibility if it breaks that support, if it breaks that trend line, possible intervention straight down for the US yen. So I'll be looking at 153.60, stop loss 35, take profit 162. Jamil just hit his take profit, fantastic, very nice Jamil, good job. So US yen I'm looking to sell at 154.60, stop loss 35, take profit 154. Hang on, .60, stop loss 35, take profit 160. There we go. All right, needs. We're watching out for possible intervention or BOJ adjustment to rates. Super. Okay. No worries there, Jamil. Glad to have been any help. Now on to 153.60. You got me there, Jimmy. Thanks for that. 154.60 would be a good place to sell as well. Imagine just selling there all the way down, having a tight stop. Maybe, I know some of you might be doing that. I wouldn't, but I know some of you who might be thinking, right, can I sell down from 154.60? Stop loss 40, 50 pips, take profit, good 100 to the downside. Some might be doing that. Could happen, but safer, slightly safer, more technical reason would be for it to break that support and that trend line. Thanks for spotting that, Jimmy. Then on to pound dollar, right? Jamil hit his take profit to the downside on a pound. It did. This was where we were. Came up, tested a resistance, pushed down. Just would have gone down to a take profit of 100 and almost 115 to the downside. It took a long time. It took a long time since Tuesday all the way through to now. Jamil got that. Anyone else got that trade? Let me know. Take that away. and all that away. Now it is at that 61.8 and swing level support area. It does need to break this point now. Okay, looking at the dollar sitting there, it does need to break this support before we're going to anticipate further downside. Let me take that away. I don't need that one. Yes, you can be looking to buy it up. I'm expecting some dollar strength to come back into play, so I would be a little bit cautious about buying it up. Okay, there we go. So what I'll be looking out for here on the pound dollar H4 will be a reaction along this support level. Right? If it comes down, tests and bounces back up, then you have that trade back up towards that resistance of 1.25. And if you looked at this, down to this point, even down to this point, we have that as a possible retracement back to 38.2 before maybe pushing back down again. Pound does have that tendency, see it drop. I'll show it to you here. That drop, it comes back up to that 61.8 before pushing back down again. It could come back up and then push back down again. Where's my 50? Right, in this area before pushing back down. The thing is to watch what happens at this support level. If it bounces, what you're looking for is about 1.2380 stop loss, 50 take profit, a good 100 pips, 110 to the upside. What I would prefer is to look for that continuation of the downside, looking for it to break that support, looking to sell down. 1.2310 stop loss, maybe even 40 pips. 30 is a bit skinny, 40 would be reasonable, and then take profit 100 and almost 120 to the downside. Right, but it needs to break that support level first. All right, so onto the pound dollar. What am I doing? Why is it not happening? Okay, onto the pound dollar, we're looking for a reaction at 1.2350 1.2340. What's that? Okay, 1.2340. Right, I would prefer to be selling it down from 1.2310, 40 to 120. Stop loss 40, take profit 120 to the downside. Or if it bounces, then you can buy at 1.2380, 50 to 110. 1.2380, stop loss 50, take profit 110. Diana says, I think price will retrace to fair value, and if it holds there, it will go. If it holds there, it'll go all the way down. Let me see. So you think they come back up to about fair value, which would be about that 23.6 level. Okay, so what Dinah is just saying is that it might bounce back up to about below 1.24 2.0 in this range. If it fails to break, then it might turn back down like that. Let me do that. Take that away. What Dino says it might do is that, and then that again. Could happen. I think that it might sit there. I actually think that it might do this, and then after that do that. Or it might just be jinxing it and just goes straight down from here. But yeah, generally looking for a move lower. I think this could happen, but it's a bit of a low chance. I don't see any big news or reasons why the pound dollar should be climbing 110 back up. Okay, so that's what I'm looking for. I think for clarity, let's take that one away then. There we go. There. Okay, then on to the euro dollar. Hasn't done too much. Euro dollar has actually been a little bit quiet, just sitting in a wide consolidation. Take that away. It's tested, it came down, tested and bounced, so move that down. Came back up, didn't do too much. Previous swing level there. Resistance. Could even take that as the resistance. Pushing. Okay, so now it's consolidating. I don't need that level. And in fact, I don't need that. Okay. What I'm seeing here is a push, consolidate, looking like it's going to hit lower. Bit of a trend line, holding it up so far. Needs to break. I think that again, with that point in consideration, even if it does break, not going to rush in, because anywhere in this region is going to be a bit tricky. What you look for it to do is to break 1.06 as a round number to head lower towards that previous swing low here, which makes sense. So I'll be looking for dollar strength, sell down below 1.06, 1.0595, stop loss 30, take profit 70 to the downside. I'm just getting a bit concerned that it's all based on dollar strength scenario. Something to watch out and be careful of. 1.3, 1.0595. 1.0595, stop loss 30, take profit 70 to the downside. Okay, there we go. Then on to the US Swiss franc. Hasn't done anything at all. Right, it's just been sitting in that range. It's just been bouncing around. Did not push up above our high. Take that away. It's still being held by that trend line to the upside. That big trend line to the upside. At this point, it is in that consolidation. Relatively tight consolidation right across. Okay. Looking at this, gonna sit there. We'll have a bit of a level here as well. You know what I'm thinking is that we'll possibly have dollar strength scenario right across. What if we have a dollar weakness to push this down? Because we do have that resistance up here. Yeah, okay, so I was thinking that maybe we can look for it to break down, but what I think would be a more logical, more rational thought would be for it to continue up. It's very similar to what we were talking about before. 0.9160, stop loss 35, 30, take profit 67, 70 to the upside. It's going to bounce around. It's not, I think it's going to move up slowly, gradually, but not a big spike. Okay, so, and also because if you look at this, dollar is pushing up. Dollar is pushing up right now, but yet we're seeing this push down, right? So I think it's going to consolidate in this range. Needs to break 9160, 30 pip stop, 70 pip take to the upside. So we're looking at this to buy 9160, stop loss 30, take profit 70 to the upside. Then onto the USCAD. Right, look at that. Only today it started breaking to the downside. So we take that away, that wouldn't have triggered. It's tested and bounced. No, it's done that. Tested. Let me see. Zoom it right out. We took this level, 38.2 there. It's come close. 50, 60. Okay, I like that one. Now, considering this area, if you look at this, what we have is that, take that away and that away. All right, it's pushed up since the 5th of April, since early April, pushed up, came back down, looks like it's tested 38.2, looking like it's pushing back up. It does need to break above that point. It does need to break above that point before we're going to see further upside. Jimmy has highlighted a possible shoulder, head, and shoulder with a neckline at that point. Yes, I see it too. Very good spot. But I'm looking at the dollar pushing up. All right, and also where's the headliner there? I saw a headliner somewhere. There. Sentiment recovers after Iran play down strikes. Defensive currencies reverse. Kiwi recovers from 2024 lows. Right. So sentiment. The main thing was sentiment recovers after Iran plays down the strikes, thinking that if they're not going to go crazy, if there's no further escalation. Thankfully, we didn't see that over the weekend. If there's no further escalation, don't think oil is going to see a big push, and then don't think I'm going to see a big strength on the USCAD. So yes, there is a head and shoulder, a break of the neckline. What we're possibly looking at is might not be a setup that will play out, because it might be pushing back up. Okay, so I would prefer to follow the trend to the upside if it breaks above that resistance. So 1.38, 90, again 90 to 30, right? Or if not worst case, or an alternate scenario, it does this and pushes down. It's just a bit odd that right now we see the head and shoulder, looks like it's breaking, but it's retracing. So you could be looking for that, but that's a counter trend trade that I'm possibly not ready yet. We're not ready to get into yet unless we see the dollar consolidate and then break to the downside. Okay, so I'm looking at this. If you want to sell the USCAD down, what needs to happen is it needs to break below 1.37. The stop loss can be about 20 pip, So your take profit will be about 70 pips to the downside. Do have both options, is right in the middle right now, but I prefer that move back up, especially if it breaks above that resistance. So 1.38, 30 to 90 to the upside. There we have it. 1.38. Stop loss 30, take profit 90 to the upside. Then onto gold. Look at that. We were talking about this on gold last week where we said retrace to test 23.27. If it holds, bounce to 24 or even as high as 24.20. So it retraced. We were here on Monday last week. It retraced to 23.27, exactly where that spot was, and then it bounced back up to that 2400. Did not get to as high as 24.20, got only to 24, almost 24.18 before pushing back down now. Okay, so it's still remaining within that channel, right? Still staying within that channel. It's hit the top, came back down, set along the bottom, pushed up, hit the top, set along the middle, pushed up, hit the top. Now it's breaking that middle and then looks like it's coming back down to that 23.27 level again. Okay, so Lingopedia is asking, what do I think about gold? Has it broken the triangle to the downside, or is it just testing the resistance? It looks like it's not broken yet. It needs to close below this point. Again, it does look like we need to see what happens at 23.27. I like it a lot more to hold this level, because if it comes down 23.27, bottom of the channel, to bounce back up, and then maybe towards 24, even 24.50 to the top of the channel. Okay, so that's what I'm looking at for gold. A bit of a downside move. We're looking for it to retest 23.27 if it holds, 23.27, and bottom of bullish channel. If level holds, bounce to 24 or 2400, because we have that nice round number resistance there. There. And then if it breaks past that, we could even see 2450. Okay, bottom bullish. If it holds, bounce to 2400. Resistance. Beyond resistance is 2450 to the upside. All right, there we go. So those are the majors and the reserve commodity. Doing a quick look at the euro yen. All right, finding a good resistance at this point here. Possible rejection of that resistance. Looking at the euro dollar trading down. Might be looking at that move back down again. Right, so euro yen might be looking for a retrace back down towards that resistance turned support level, because we are expecting the euro dollar to push lower, so that could drag the euro yen down. Then onto the pound yen, same thing, pound dollar expected to hit lower. That worked out, bounced off and pushed up. Now at this resistance turned support level. If it breaks this point, we don't need that. Take that away. That channel is going to hold. I can take that channel, or that line, trend line. If it breaks this level, breaks that support, pound dollar heading lower, we could be looking at 190.50, no, 190.70 stop loss quite wide at about 70 pips, but big space below. I don't think it's going to move 250 pips to the downside, but there's a potential for that move back down, right? Similar to that we saw breaking lower. Now we're looking for a rejection or breakthrough of the support back down again. So that similar move lower. Confirmation of that will be if it breaks below 9025. So actually what you could be looking at, a safer option would be below 190, take profit 180, stop loss could be tight to about 30 pips. Right, so look for it to break the trend line, break the support, break the trend line, hit lower, break below the low from April, and then it could see big move to the downside. That would be a very nice trade on the pound yen. You've heard it first here. If you do get into that trade, remember to let me know. Then on to the Swiss yen, broke out of the channel, done all that. Take that channel away. We saw that resistance and it broke up to test that previous swing high. It's moved exactly as where we expected. Now in this double top area, we're looking for that to push back down. But looking at the Swiss yen consolidating, maybe if it pushes down, I think that because the Swiss yen, the US Swiss franc, or the Swiss franc the Swiss is not doing too much, this might fluctuate around this level for a while. You might be looking at only if the US yen starts to plummet, then you look at the Swiss yen start to drop. If it breaks below the support level, you'd be tight 35, down 100, a big move to the downside. But between these trades, I kind of like that one a lot more. Okay. Then the gbpusd, I don't trade unless I watch analysis, especially for gold. Analysis not only post explanation but some accurate predictions. Thanks for that, Linkopedia. I appreciate that a lot. Considering intervention for BOJ, probably all yen pairs look for short. Yes and no, because as much as I'm preparing or considering a possible intervention from the BOJ, you know the BOJ, we know the BOJ, they're not always, they don't operate on our time frame, so it will come as a bit of a surprise. Yeah, so it's, I think if the intervention comes around, you got a lot of other trades to get into pound yen, US yen. I probably wouldn't have that mental capacity to even look at the Swiss yen at that time, just with how choppy it's been going, like you said. Okay, so with that said, please remember, if you haven't already, I will look forward to seeing you all on the 24th at 8 p.m. GMT +8, where we'll be talking about how to scalp intraday trade or swing trade on the Tick Milk webinars. And if not, then I'll see you on Discord. Again, the link is there for the webinar. I'll see you on Discord, and I'll see you tomorrow, same time, same place. Take care now. Bye-bye.